Hello everybody, welcome to North of the Blues market overview for January 12th, 2011. Real quickly, I want to show you some cool new things that North of the Blue have been working on. If you go down to list and see mutual funds, you'll see that we now can analyze mutual funds or evaluate. And so we have the list, and this is the current list right now. And the cool thing about these, a lot of people have mutual funds, teachers have mutual funds, and then a lot of people also trade in ETFs. So what I'm going to be doing is compiling a list of mutual funds and then also ETFs that correspond with the mutual fund. So you can trade in both of them or one or the other. So mutual funds currently, with our testing, do about 1 to 2% worse than ETFs just because there's a little more cost in having mutual funds than ETFs. But they're pretty similar, and I know a lot of people have mutual funds in their 401ks. So it's something you can trade with, and it's a great new tool that I'm excited for it to come out. The other thing we just added in is you can actually look at the indexes now by themselves. So here is the Dow Jones, and that's the actual index instead of just having to look at the ETF. So if anybody enjoys looking at indexes, what they're currently doing, you can do that as well. And of course, as you all know, I enjoy using the Dow ETF, DIA, and as you can see, they're sort of similar. They just have less numbers over here. So let's go ahead and get started. And since I'm on the Dow Jones, we'll start with this. As you can see, we had that little sell-off week, and then we had the rebound. Only the blue price line came down below the 85%, and now it's rebounding because the upward price, as we can see, stayed flat. And so what happens, for an explanation, if I click on bars, you can see that the upward price did not move that much. So if these were very large sell-off days like we had here, we would have seen it move down. So since there was about 2 or 3 sell-off days and the price didn't move far, the upward price strength only came down a little bit. Volume, though, however, since they were sell-off days and there was a lot of volume in these 3 days, the volume moved down and now is picking back up because the price is going up in the market. So that is how this rebound works, and that's how we have programmed, because all of these are integrated together, and so they work as one. So that is the Dow Jones right now, trend moving back up after that little sell-off period. And let's go ahead and look at the S&P 500, which almost looks exactly the same. However, the blue line did not even touch the 85%, so S&P 500 doing very well, going right up in there. And my favorite right now is the NASDAQ because it barely even had a sell-off. And we see, what's that, 3 or 4 blue days, only a few sell days throughout there. And technology stocks still just ripping and roaring right up. So that's it for the markets real quick. Actually, let's go ahead and take a look at bonds, because bonds have been doing bad. And let's go ahead and click on bars, and as we can see, now we get this, the high price is kind of moving up, and we see it's going to be hitting this blue moving average right here. And again, we want the upward price strength, which is the black line, above the high price strength. So we want the price strength above basically the volume strength. If the price, it's been proven in most cases, if the price is going up, then the volume rise up too. Not in all cases. As you can see in November, the black was still above the blue and it still dropped. However, most of the time, when the black is above the blue, that's when you're going to see it rip and roar right up through the blue moving average, and right now you're most likely going to see a bounce off the blue moving average and the bonds continue to go down. So let's go ahead and look at the market overall, which would be IYY, and we can see that bounce right there, and all the markets just going right on up. And real quickly, I haven't looked at this one for a while with everybody, and this is the emerging markets. And here it is again, what I just said. You know, the blue is above the black. However, it still came up. So we had lots of volume, and the upward price strength was a little weak, but it still pulled it up. And then we had the very nice drop down, which caused the price to stay above the volume, and now we're going to be seeing a bounce off the 50% right here, and most likely a continue rising in the emerging markets. So not always will the black be above the blue, but most of the time, as you can see in the history's past. So real quickly, let's go ahead and take a look at some of the precious metals. This is gold, and we're right at the 15 and 50% in our power lines. However, we're sitting right at the blue moving average, so tomorrow is a big day for gold. We'll either see it break through the blue moving average again, which is what I suspect it to do, or we will see it flop below the blue moving average in these power lines to move flat, such as they could have done somewhere along this time zone. So that's it for gold. Silver, real quickly, let's go ahead, and silver has already been bouncing. It says 60 cents today and up, and however on my Google it actually says it's even up to $29. So for some reason that's a little off today, and we are in the middle of actually changing all our back-end work to be information be coming from Yahoo. So we may have a little bit of scrutiny in these. You may see a little off, and Apple on our program was a little off today as well. So there's silver bouncing up, and for stocks that I'm watching real quickly, let's go ahead and look at AGQ, because this follows silver. ProShares Ultra Silver, which I think is 3 times the amount of silver. As you can see, it does $5.64, almost touched the blue moving average on that very nice trend rebound. As we can see, this came and started flattening off, and the blue power line, came down and is hopping up there. One second. Okay, so that's one of my silver stocks that I'm watching for 2011. I love silver. I think it's less volatile than gold. As you can see, we have had some very large drops, but every time we hit a new 52-week high, it drops right back down, which is completely fine, because if you can master the trend rebound, you can get out on top and re-entry right at these levels when it's lower. So another one of my favorite stocks that I'm watching for 2011 is F5 Networks. This is actually one of the first stocks I ever traded, and if I had stayed in it, I would have been up over 110%. So that would have been nice. But as I did see this trend rebound coming, I did enter it right in this area. I believe it was 130 or something like that. So anyways, already entered F5 Networks based on the trend rebound rule. So that is another stock I'm watching for 2011, so everybody knows. And then my next technology stock I'm looking at is, of course, Apple. And here we go. It finally changed. It was at negative 80 cents, which was wrong. So information is always flowing in through north of the blue, as this will change as the markets are opening, closing, and even apparently at 5:41 p.m. it has changed. Finally being updated and backed up by multiple sources of information. So as you can see, the trend for Apple is continuing higher. Did enter Apple at $306 at this bounce right here. For some reason, I did not enter it here. I watched it go the entire way and was hitting myself in the forehead for not jumping into Apple. So as you can see, if you miss it, there are other chances to hop in stocks that are moving up, and that is with these trend rebounds. So those are the stocks I'm watching right now. As you can see, this one is so far above the blue moving average. There is no point in entering right now. There is no rules that it follows. So make sure you're always following a rule with north of the blue, and use north of the blue to evaluate the stocks in your portfolio. If you are seeing something, now I'm even guilty of this, FAZ has been one that has been bad in my portfolio. If you see FAZ or any of these other stocks, securities, ETFs below the blue moving average, you don't know when it's going to come back above the blue moving average. So beware, know the rules, because right here, this blue above the black, probably going to bounce off, and it did. And if we look at the reversal, FAS, you can see which one do you want to be in? Do you want to be in the one that's moving the blue above the blue moving average or below?